Good day, traders. This is Rich Derrick from tradesight. I want to take a moment this morning and take a look at the condition of the Trin, and more specifically the 10-day average of the Trin or the ARMS index. This is something that we track regularly at tradesight to help us understand if the market may be in an overbought or an oversold condition. Now the Trin works contra to the market, where 1.0 is the baseline, right in this area here, and when the Trin is moving higher, that's actually negative price action and selling pressure in the market, and when the Trin is moving lower, there's actually buying pressure, upward pressure on the overall market. What we've done here is we've marked off two thresholds here, 1.35 on the upside and 0.85 on the downside. And what this represents is a move away from that 1.0 kind of fair value or trading harmony, if you will. What we've noticed over the years is that when the 10-day Trin, which is what we're looking at here, this average is represented by the green line here, the blue line here rather. once the 10-day average hits or falls below the 0.85 area, that tends to be a fairly decent overbought condition in the market, where the market can either no longer go higher where it has to go sideways, or whether it has to have some kind of a reversal to work off that overbought pressure in the equities. As of yesterday, we closed at 0.87. We had an intraday Trin reading of 0.73, which took the average down very close to that overbought threshold. A few weeks ago, we had talked about a very possible reversal back to the upside, as indicated by the AAII sentiment survey. And what I did is once we got that reading and developed upside in the market, we started tracking this very closely. This is the 10-day Trin I'm talking about, just to see when we would get to that exhaustion point, because that's the point at which the easier money in the upside move has been made, and then you're really kind of getting very low in the gas tank, if you will, as far as how much further this advance can progress. So right now we're right at that threshold. We haven't punched through it climactically, but we're right at it. Why don't we take a look at how the S&P, which represents the broad market, tends to react versus these overbought readings in the 10-day Trin. Now here I've just changed the chart. What we've done is we still have our 10-day Trin with our overbought and oversold thresholds labeled on in here. Oversold is up here, overbought is where we are right now. And on the lower chart, this is the S&P cash index, just to represent the overall broad market. And you can see we've had on this chart now, this is going to be our fourth touch near term for the last couple of quarters or so. You can see we had this breach and this hit into the 0.85 area, and you can see what happened to the overall S&P here. It was enjoying very nice advance to the upside here. Once we hit this threshold, it really kind of arrested the advance. The market started going sideways and ultimately had this first pullback here, which ultimately led to this very sharp decline at the very beginning of the summer. So the 0.85 touch and breach here was a very good indication that this advance was getting long in the tooth, and either a consolidation or some kind of a corrective move was in the cards. Subsequent to that, we also had we had this touch here a little bit later towards the end of the summer. Didn't reverse the market, but it certainly kind of put a cap on it, and we ultimately went sideways for many sessions here until that condition was worked off. The 10-day Trin moved back more towards the neutral area and actually got a little bit towards the oversold area up here before we had another reading here. This is mid-September, and in mid-September that was coincident with this peak in the market here that again didn't really reverse trend at this point, but really arrested the advance and held this in place for many weeks. And again, we have this retest, if you will, of this area right in here. kind of right back to that breakdown area. And again, this is going to be a key area for the market, but at the same time, while the bulls are trying to push price back up into this breakdown area here, we're kind of left in a situation where we've got very little gas in the tank here, because we're down to this 0.85 overbought threshold. So this is definitely something that's going to be important for the next couple of trading sessions. We've had, coming into yesterday's session, we had a multi-day advance that was 5 or 6 days up, and yesterday the market reversed down lower, and all three sides, the ES, the NQ, and the YM, all closed lower on the day. So we definitely had what could be the beginning of a little bit of some either sideways or corrective activity, and this is definitely being supported by our 10-day trend. So if you'd like to learn a little bit more about how we use our internal analysis of the markets like this, and also some other things that we look at, please feel free to stop into the Trading Lab. You can take a trial and hop in for a free few weeks. We'd be happy to answer your questions in real time live. And again, this is Rich Derrick from tradesight. Thanks for watching.